Hi there, and welcome to the first Abu Dhabi Bank Global Investment Outlook. This is the quarterly update, and I'm thrilled to be joined by Musa Haddad, who's the Senior Equity Portfolio Manager at First Abu Dhabi Bank. Musa, thanks a lot for joining us.
Thank you very much. It's a pleasure is all mine.
Let's get stuck in. So, MENA Equities, they've been once again outperforming global equities so far, YTD. Is that purely a function of oil, or that there's some more contributing factors?
Well, it's a really great question, but there is two aspects of it. Let's look at it from a global, not from a global, I mean from a macro perspective, and let's look at it from a fundamental perspective. Now, the GCC currently is going to witness or going to be in a very global, we would say global bright spot with a rapid GDP growth above expectations and above consensus. And the major part of that is coming from definitely higher oil prices. So there is a huge amount of contribution coming from oil prices. And I think what's going to happen is that you're going to see that huge amount of growth this year. And we're expecting also that to continue next year, but at a less magnitude compared to this year, as things starts to normalize. But again, when you look at it from a fundamental perspective, I think there is a huge amount of changes that happened over the past couple of years, especially after the pandemic. So, and when you compare that to global. So there is a huge amount of stimulus that post the pandemic was there. The earning growth of the companies has significantly outperformed the earning growth that we see globally. At the same time, the interest rates that we see currently in this region is the higher interest rates from the Fed is actually beneficiary for this part of the world, especially when it comes to the banking sector. So, and this is where we are more optimistic about the banking sector at this point of time. For multiple reasons. One reason is the interest rates, the earning growth, the credit growth is there, driven by mortgage. And at the same time, the NIMs, non-interest margins, are also expanding. So with that being said, then profitability is going to be much higher. Lower provisioning is there. And of course, not to forget that this will contribute in higher dividend payouts. So this part of the world also enjoys a high dividend, higher earning growth when you compare it to global peers. Now, at the same time, there is that risk that people talk about, which is the inflation part of it. Now, when we talk about inflation, the expectation of the inflation over here is about, let's say, expectations around 3% or 3.2%. When you compare it to global, it's around 7 to 8%. So there is a huge amount of gap there. Now, the reason behind this is because, of course, we have a higher per capita. We don't feel the higher higher inflation pressure in this part of the world. And of course, the higher oil prices will also contribute to that. So in that sense, we don't feel it. We don't see there is a huge amount of risk. So all of that taking into consideration, I think the reason behind the outperformance, and we believe that this is going to continue for this year and also for next year, despite the short-term corrections that we have seen recently.
Okay, interesting. You mentioned the banking sector. So what other sectors, or for that matter, other countries, would you advise investors to keep a sharp eye on?
So in terms of the sectors, and I will drill into the countries, but this is where we saw, because we're more bottom-up approach. So we look at companies, and then we look at sectors. That would drive us for the sectors, and the sectors would drive into the countries. But when you look at the sectors, for example, I think the banking sector is one. The second one is definitely the real estate market. The real estate are enjoying valuations are very cheap, especially when it comes to Dubai. Strong sales that we have seen continues to be the case. At the same time, as I mentioned, valuations. The valuation when it comes to some of the companies in Dubai, for example, are trading below one price to book. So when you're talking about that, that is deep value. At the same time, some of them give you higher dividend payout. So you look at, especially when it comes to UAE perspective, you look at it from two different angles. One is the valuation part, and the second part, definitely, it is the dividend payout. So that's the real estate market. The second part, the third one we will still do like is more about anything that is related to industries or, in the field of, cheap carriers that in this part of the world. These will also benefit a lot. take in consideration that the tourism is coming back, and especially to the GCC markets and especially Dubai. So that is, and the valuation of these companies are really cheap compared to international companies in the same field.
Right.
So I believe these are the three main sectors. The last sector we do like is the consumer discretionary, but this is linked to one major factor right now, and we're waiting if that's going to happen. If you remember, pre-pandemic, especially, Saudi Arabia has increased the VAT taxes from 5% to 15%. The Ministry of Finance there is some news that the Ministry of Finance will revisit or revise that back to 5% in line with the GCC countries. If that happens, then this is a sector that you want to look into, and we are optimistic. Not because of that only, but again, the strong growth of that sector is huge. You're talking about double-digit growth in that sector, increasing market share, and consolidation of that sector continues to be the case, and that's a sector we would like also to invest in.
You've mentioned dividend yield, so let's throw in coupons, and it's that old classic story, equities versus fixed income. What are you seeing? What advice do you have for the people listening?
Now, for the past 2 years, the equity markets in the GCC and the MENA region overall have outperformed global. Tremendous amount of performance. You're talking about double-digit performance. Last year, for example, we have made around, on the equity side, made 40 to 45% return. Of course, we had a huge amount of drawdown during the pandemic, but then that huge recovery we've seen. Again, the dividend, because of price appreciation, and we still believe that the companies will continue to pay dividend, even higher dividend. We're looking about 3.5 to 4% dividend yield on the equity side. But when you come to the fixed income side, the dividend, the coupon or the yields are much higher. So we're looking at that point of time, that single aspect of there, especially in the GCC, it makes sense to start, not saying that you move completely from equity to fixed income, but start to revisit the fixed income space again. Look at those companies and those papers that provide you with really strong dividend yield, and credit rating is BBB and above. Then look at those again, revisit them. I think it is time to start fishing again for fixed income space, slowly, but it doesn't mean that you move completely from equity to fixed income, because still we believe as a long-term investor, equity markets will continue to perform really well over the longer term. So in that sense, I think it's, as I mentioned, just revisit again the fixed income space, looking from a yield perspective.
I'm very sure on the Q3 update, by the way, I'm going to be asking that question again, so be prepared. In closing, it seems very strong. MENA Equities are performing as always, and it's been a very good story. What would keep you up at night? What's there? What road bumps, big or small, would you be concerned about moving forward?
One part, the fundamentals, I'm not worried about. Valuations, I'm not worried about. The valuations of the MENA as overall, we're talking about valuation of 15 times multiple for this year, and we're looking at around 13.55 for next year, with an earning growth this year, you're talking about 12%, and next year we're talking about 8 to 9% earning growth next year. So and the companies are very comfortable with these numbers, and I don't have any problems with terms of the fundamentals. Now, what wakes up is two major things. One part is a undershoot in oil prices. That could happen. That's always the case for the GCC markets, and any geopolitics that could happen that we're not aware of. These two things I can't forecast. It's very difficult for anyone, any fund manager or any analyst, to forecast these two things: political or oil prices, where they're going to go. So these two things are the ones that keep me awake. But again, there is one aspect. If you go back to the couple of years from the Arab Spring till today, any geopolitics that we have seen was short-lived in terms of the equity market space. So you get that strong drawdown in the market, but then suddenly things start to recover really quickly. So, if God forbids things happen, then basically that is only for us as an opportunity to actually reinvest again in these markets. But you have to also take in consideration the risk and the rewards and all of that. But again, these are the two main things that really keeps me out, because it could happen and I cannot forecast them, and they could happen.
Correct. No, always insightful, always very informative. Really appreciate your time.
Thank you very much.
Thank you.
Thank you.